Good morning, everyone. Thank you all for joining us once again for our Sunday speaker series. It's wonderful to see you join us on this fine Sunday morning. William Friedland will formally introduce this morning's program, but I wanted to use this opportunity to publicly thank William. As you may or may not know, the synagogue is currently in the process of renovations. And with God's help, in the near future, we will have a beautiful, new and modern building. And William serves as the chairman of the renovations committee. And one thing I've learned in life is that whenever you come across a quality, meaningful experience, whether it be something as simple as a good meal or something more complex, the reason why it is such a meaningful experience is because there is someone behind the scenes who is putting in an enormous amount of effort to carefully create and mold that project. Nothing happens by itself. Whenever you come across something of quality, it's because someone carefully and diligently worked on that project. And in terms of our building, William, along with a few others, is investing an endless amount of time on this project. There's so many different layers to renovating a shul. First, you need to have a design plan. Then you need to hire a construction team. And then you need to organize a fundraising campaign. All this being done while the shul, the synagogue, is still functioning daily in the building in which the renovations are taking place. It's an incredibly complicated and challenging project in which William is deeply engaged in. He brings his unique insights and expertise in the field, which cannot be replaced. There's no parallel. He concerns himself greatly with the project. He puts his heart and his emotions into it. And it's all done from the goodness of his heart because he cares about our community and our shul. So I want to use this opportunity before we begin to publicly thank William for all his dedication. You have to thank his wife as well for all the time that she allows you to invest in the project. And then with Hashem's help, with God's help, all your efforts and the whole team's efforts, should build a beautiful project that should bring honor to our community, to the Almighty, and be a place of inspiration for many, many years for countless individuals who come through the building with God's help. Thank you, William, for your efforts, and I call upon you to formally introduce this morning's speaker.
Thank you, Rabbi, and I hope it will be a meaningful and beautiful project. But as discussed and as Bill, this is definitely not a seminar about me. This is an interview with Bill Ackman, this morning's guest of honor, who's a really interesting and fascinating person, and I think we should have a good time this morning. Bill Ackman is the CEO and portfolio manager of Pershing Square Capital, which was founded in 2003. Prior to that, Mr. Ackman co-founded Gotham Partners, an investment advisor that managed public and private equity hedge fund portfolios. Prior to Gotham Partners, Mr. Ackman began his career in real estate investment banking at Ackman Brothers and Singer. Mr. Ackman received an MBA and a BA from Harvard. He's the chairman of the board of the Howard Hughes Corporation. He's a member of the Investors Advisory Committee on Financial Markets for the Federal Reserve Bank of New York, a member of the Board of Trustees at the Rockefeller University, and a member of the Board of Dean's Advisors of the Harvard Business School. In 2006, he co-founded the Pershing Square Foundation to support exceptional leaders and innovative organizations that tackle important social issues and deliver scalable and sustainable impact across the globe. He was also last year at the leading edge of the SPAC boom, a tremendous private real estate investor in his own right, and personally committed and passionate about the public welfare, both through the Pershing Square Foundation and individual initiatives. Last year, I was honored to be part of a restaurant initiative that Bill had started to try to help restaurants pre-federal help, and when things were really, really struggling, especially last summer, to help try to figure out both the logistics and the governmental navigation that was necessary to bring back our restaurant industry. He's a public citizen, an interesting guy, and I'm going to stop talking because I'm looking forward to the conversation. Jacob, go ahead.
Thank you, William, and echo the rabbi. Thank you, William, for all your hard work for the synagogue. We still have a lot of great work ahead, but we're very grateful for your help. So, Bill, thank you so much for giving us your quality time today.
Sure.
There are a lot of people on the webinar, and there are a lot of people that will watch the recording. But for those of us or those on the call that maybe have never heard of you, if you can just give us some of your background. So, William, it sounds like you started out in real estate investment banking, and then you moved into finance. So can you walk us through your background a little bit, please? Thank you.
Sure. I actually went to work for my dad, Larry Ackman, right after college. And Dad's business was arranging financing for real estate developers. So I learned a lot about real estate development. I met people like the Friedland family, but ultimately decided that it was more fun to be not in a service business, which was my dad's business, but be a person making the investment decisions. And so I went to business school to learn how to be an investor. And I arrived at Harvard Business School, and I learned my first lesson in the first week, which is I opened the course catalog to look for classes on investing, and there wasn't one. Actually, Harvard, literally there was a class on investment management, the industry. So like if you wanted to be CEO of Fidelity Investments, they would kind of train you to be that. But I wanted to learn how to be an investor. So I had to sort of teach myself, create a course, select a collection of courses that would help. And I had a small amount of money that I had made that I didn't need for, my parents were paying for my tuition. I was paying for my expenses, but I had a little bit left over, and that became my tuition in the investment business. So I started investing. And then I was doing this alone in my dorm room, and I recruited a classmate, a guy named David Berkowitz, to be part of this two-person, it wasn't even an investment club at the time at the business school. And we had fun kind of looking at ideas together. And I said, look, imagine if we could do this and people would pay us to do this. And that was the genesis for starting a hedge fund, which I did in 1992, called Gotham Partners. And that's the beginning. And it hasn't been a straight line up, been lots of peaks and valleys, but the general trend has been favorable.
So maybe walk us through. So you're working with your dad more on the real estate side, but you started your fund more, I would say, on the stock market side, right? So what pushed you not to do real estate and to go into the stock market?
A friend of my dad's, a guy named Leonard Marks. My dad introduced me to him as someone he thought of as a very successful stock market investor. And Leonard Marks recommended I read Benjamin Graham's Intelligent Investor, which is a great entree into the investment business. And I describe it like if you read Jean-Paul Sartre's essays on existentialism and it resonates with you, that will lead you on one path. And this was my introduction, and I got enthusiastic about investing. And investing in the stock market is the most accessible form of investing, because literally with any amount of money you can start and be up and running tomorrow. If you want to invest in real estate, you need more capital. It's more complicated, legal fees, etc. But here I could open, at the time, a Fidelity brokerage account, and I was in business, and that's where I started. Now, over the course of my career, one of the things mentioned is I chair a company called the Howard Hughes Corporation. It's actually a real estate development company. William and I have invested in real estate together, and personally, I've kept a connection. I'm very passionate about real estate, and I enjoy architecture and design. Happen to be married to a brilliant architect, so I do admire and appreciate real estate as well.
So just because you brought up real estate, New York real estate, it seems pretty stable, at least the residential market, but the rents have gone down. Any perspective? Are you concerned about New York real estate since COVID, or what are your feelings on that?
Yeah, look, I think real estate is just not something you can talk about generically. It's almost a block by block, building by building, property type by property type analysis. But what I would say is, I think, first of all, I think it matters who the next mayor is. I think we need a mayor who's going to be pro-business. It's going to encourage companies to locate here. It's going to, create an environment where people feel safe. I think when in the early 90s, late 80s, when I first lived in New York City, I said, imagine how great New York would be if it were safe. And we've had the benefit of that feeling of safety for a very long time. And I would say it's been challenged. I would say that's the single biggest issue beyond COVID over the last year or so, is that people have not felt as safe. And part of that is the lack of, quieter streets, fewer people on subways. And I think as the city kind of reopens this summer, and to a greater extent, I think September, when Midtown will really reopen, people get back to their offices. I think that will make the city safer, but I think who the next mayor is matters. If we have the right mayor, I think New York City is going to be fine. And I think the city is going to recover. And yeah, I agree. Residential people are buying expensive apartments, which I find interesting. And I think the rental market will come back very quickly. In fact, if you haven't, my brother and sister-in-law just are in the process of signing a lease, coming back to the city, and I see it. You'll see more of that. And as residential for sale pricing continues to rise, that ultimately drives rental housing as well. And then, of course, retail, I think maybe was in a little bit of a bubble in New York City, and to the point that only banks could afford to be located, could afford the rent, so to speak, or kind of global retailers. And
not true at all.
But I think that market is going to stabilize as well. And actually, to William's point about the restaurant industry, I think this will be the greatest period in history to open a restaurant. So I think you're going to see a lot more restaurants open in New York, and I think the city is already, if you walk around, coming to life. And I think the street presence of restaurants, I hope, becomes a continued, is continued, because I think they should improve the look and feel of some of these shanty-like coverings. But if they can make a nicer look and feel, I think eating outside has become a great, an even better part of New York.
But because William mentioned it, can you tell us about this restaurant initiative that you sort of led or thought about to help the restaurants?
Yeah, it was really very informal. We got a group of restaurateurs from the Danny Meyers of the world and people interested in the industry, Tim Zagat, to more local kind of operators, to just really talk about the challenges and how to address them. And I think the entrepreneurship of restaurateurs is ultimately enabling them to recover and deal with issues like getting the city to approve propane outdoor heating, things like that. Were critical to help restaurants through that period. But I do think restaurants that have survived are doing very well now, and I think they'll continue to do well.
Great. So going back to the mayoral campaign, is there any? I mean, are you picking one candidate? Or are you backing a couple? Can you give us some perspective? I mean, I think we all agree it's important, but can you give us some direction?
Sure. So I know Ray McGuire beforehand from business. So Ray, I have supported in a pretty significant way. He has, I think, not yet gotten the traction that I think he deserves, but I think he'd be an excellent candidate. Andrew Yang, who has gotten a lot of traction, I've spent some time with, and actually I think he could be a very good mayor. Young, dynamic, high energy, pro-technology, pro-business. I think he's going to attract a lot of, he's a bit like Obama and in the kind of youthful energy that he has. And I think that New York could really use that as well. And I've heard some good things actually about Eric Adams as well. So I think we've got a number of good candidates, and I think it's just critically important people vote. I mean, these kind of city elections are decided by a tiny number, a tiny percent of the people who live here. And one thing I've never done this before, but I contributed, actually $1 million to kind of a get out the vote effort, because I just think you want this election decided by, the majority of the people live here as opposed to a small minority.
Right. Also, you mentioned something really important. You mentioned about safety. So this week there were terrible incidents, of Jews and anti-Semitic incidents. I don't know if you've been following the news as aggressively. I'm on a security list because of the security of the synagogue, but just wanted to know your perspective. I mean, I don't think New York's been this bad? I mean, you grew up here, so you tell us, has it ever been this
So,
bad?
I grew up in Chappaqua. I moved to the city in 1988.
Okay.
And, you know, I'm not close on the crime data versus then. I think things are still better now than they were, but it's not a comfortable feeling when there's anti-Semitic violence, of course, anti-Asian violence, random people getting punched on the subway. I think part of that is, you know, the pandemic was a very challenging period of time for a lot of people. A lot of people were released from prison, many of whom had mental health and other issues. And I think the relationship between the mayor and the New York City Police Department is probably about as bad as it gets. And I think that's really what's led us to where we are now. And that's why I think having a mayor that's respected, that both respects the police department and is respected by the police department, is probably one of the most important criteria for, you know, who should be mayor. But and I hate waiting around for that. But I do think that as the city gets more occupied, it will become safer. It's sort of the random person on a subway with no one else is there on the platform where some of these incidents sound like they tend to happen. Although again, Times Square, we've seen some horrible problems.
Sure. So before we talk about some of your career, what's I find fascinating, there are very few people like yourself. I think you have a $1 billion foundation, if my information's correct. Can you give us the impetus of when you started that, why you started that, and give us some color on that, please?
Sure. So the philosophical underpinnings of my philanthropy actually come from reading John Rawls in college. And he talked about, his argument was basically that the way the world, if you want to figure out how the world should be organized, don't ask any of the current citizens. Go back to what he called the original position. So pretend you're not yet born. You're about to land on Earth. You're going to be born in sub-Saharan Africa. You're going to be born on, 90th Street, or you're going to be born on, Park Avenue and 72nd Street. How should one allocate resources? How should we design tax policy? How should we do all these things? And my thesis was that I was going to be successful. And I said, look, if I'm successful, I'll return the favor. I'll pay it back. And I also come from I do think philanthropy is not genetic. I think it's learned. And it was something that my parents, my father in particular, always used to talk about, the importance of giving back and being philanthropic. And so, I've been super fortunate from a business point of view. I started the foundation about 15 years ago, and we've given away about $530 or $40 million over the last 15 years, and I had a windfall from a tiny investment that turned into $1 billion, and I gave those assets to the foundation. They're not yet liquid. They become liquid sometime in the fall, September, but we're going to have a lot more resources to work with.
So have you given away half of the billion already? Is that what you're saying?
No, but before we got the billion. Okay.
Oh, okay, got it.
We've made about 500 million plus of grants to various organizations, and now it's really the first time we're going to have a pretty big size corpus in the foundation. Up till now, I've sort of funded it most on an as-you-go basis, and the total net assets have been something in the $100-200 million range. But I've given away more than the typical 5%, a lot more, often 100%. This time we have a big windfall, and it will give us an opportunity to think a little more seriously about how to spend those kind of resources.
Okay, great. That's amazing that you do that. So you do that with your wife, or you run it yourself, or how do you have people working for you? How do you
So all the above. So we have so Neri, my wife Neri, and I are co-trustees of the foundation.
Okay.
We have a advisory board comprised of about 8 or 9 people, including some family members and some non-family members, and then we've got a small staff of about 4 full-time people.
Okay, it's great you're doing it. A lot of people wait, it's great you're doing it at a young age where you can have a good impact.
What's nice, you consider me young.
Okay. So another thing you mentioned, people are very concerned about taxes in New York. Curious if, friends of ours have left New York for tax reasons. Curious your perspective on that.
Look, I think that tax policy is really important, and it needs to be designed in such a way that it maximizes the revenues, as opposed to, some people aren't that thoughtful about tax policy. And the problem, once you reach certain thresholds for tax, is you don't need to lose too many, super wealthy people to have a very, very negative impact on the tax base. And, the hedge fund crew going to Miami is not good for kind of the revenue base. So I think we need to be thoughtful about tax policy. All that being said, I think one of the benefits of being financially successful is that you should be able to live where you want. And the notion of deciding where to live based on saving some money on taxes just never worked for me. So I think New York City is going to continue to be an extremely desirable place. You want to live where people you love and your family, and where you can put together interesting dinners, and you can get business done, and you can go to theater and the opera, and there are a lot of and other interesting people happen to drop into New York City on the way to other places. So I think that's why I think New York will do well. But I think we need to design tax policy that doesn't chase away revenues.
Okay, great. Appreciate that. So let's go back. You're at Harvard Business School. Your first fund is Gotham, is that correct?
Yes.
And you ran that for how many years, give or take?
So 1993 to 2000, about 10 years.
Okay. And how was that fund different than your current fund? Were you also an activist investor then, or give
Yes.
us color on that?
The differences were I didn't know what I was doing because I had no experience. So the second time around, I have a lot more experience than the first time around. But what I mean to say is, we started out as we actually became an activist fund, even though it wasn't the plan. It's just sort of in my personality. I had a partner, an equal partner, a guy named David Berkowitz, who's still a close friend. And we focused more on smaller situations. We did a lot of real estate related investing. And eventually we went into kind of private equity investing in addition to public equity investing, which was a mistake in retrospect, not because of the investments we made, but mixing private assets in a vehicle where people can take their money in and out is just a recipe for a problem. And eventually we had that problem, which led to our decision to wind down that entity. So Pershing Square, the current business I run today, is really all the good ideas I got from the first time round, and learning, and plus all the learnings from the mistakes we made in terms of how we were structured and otherwise.
Got it. So your current fund just focuses on public assets, correct?
That's correct. Public, liquid, large cap companies, basically.
Got it. So the first fund, you did some private, some public, you liquidated that. That was a 10-year fund.
Yes.
And now you're strictly.
And it took about 10 years to liquidate, to get the last little dollars back to people. Actually, the windup did quite well for people, but it just tells you that illiquid assets you deal with for years.
Right. So correct me if I'm wrong, but so you'll take bold bets. If you believe in something and you'll stick with it. You're not the sheep. You're sort of doing your own thing. And maybe tell the group what do you think that makes you unique from other hedge funds? I mean, that was my opinion, but let's hear what you're going to say.
Sure. So I think what's unusual about us is we're very concentrated. We own 10 investments. A lot of people talk about being concentrated. They might have 30, 40, 50 investments. Their top 5 are big, but we literally own 10 things. So we're super concentrated. We're having some technical issues. I see myself popping up twice here. Can you hear me?
I can hear you. Anyone? I can.
It's me. I had to get off and rejoin, and I think my name is wrong. That's all. Sorry.
Okay.
It's William Friedland. Sorry.
Okay, go ahead. That's okay.
I was concerned another William Ackman popped up.
Maybe we're cloning you, Bill. Go
Sure.
ahead.
So I think what's unusual about us is, one, the degree of concentration. Two, we're very long-term by most investor standards. We're generally long only in terms of we own things, we don't short stocks. We did a couple times famously in the past, but not going forward. And we do take an active role in the companies that we invest in. We often join a board of directors. We've made some changes to management. This is lots of very talented people doing interesting things in our industry and different things. But the other unusual thing about us is that about 90% of our capital is in a public company that the employees of the firm are the largest shareholders of. And the benefit of that is we don't have to worry about money being redeemed. And so we can make very long-term investments. And that's a structural change that we're able to effectuate over the last several years. So, one of the great advantages that Warren Buffett has is he manages a public company, doesn't have to worry about investors redeeming their capital. The problem with hedge funds is that your money can leave typically every quarter. And it's hard to be a long-term investor when your investors can take their money back. And so we're now structured like Berkshire Hathaway, which is a huge advantage.
So tell us how were you able to structure it that way? How did you?
So a typical hedge fund starts out as a partnership, if it's a U.S. entity or an offshore corporation, but basically a privately placed corporation. And my ambition, I learned a lot from Warren Buffett, mostly by reading what he had to say. And Buffett started out managing really an activist hedge fund. If you follow him from the mid-1950s to the late 1960s, he managed what best described as an activist hedge fund. And then he gave his investors the option, in effect, of he basically said, look, I'm going to return all the assets, but if you'd like, you can go along with me in a company called Berkshire Hathaway. He sort of merged his hedge fund into what became what was a textile company at the time, and became a conglomerate that he's managed over time. And the benefit, what was interesting is he gave up the right to receive a share of the profits in exchange for permanent capital, which tells you how he valued it, or how highly he valued it. And we started about 12 years in at Pershing Square. We launched a public entity structured as a European closed-end fund with a business plan to get to the same place ultimately as Buffett. Didn't get there precisely the same way, but over time, the vast majority of our assets are now in the public entity.
Great.
And the Buffett also owns half of his public company. In our case, I and the other employees own about 25%. And it takes a 75% vote to liquidate the entity. So the large stake we own gives us effectively permanent money to make very long-term decisions.
Got it. So you have staying power where other hedge funds, can't do that based on their investors needing to liquidate. You're in a position where you can take longer-term positions and
Yes.
get better returns.
And that's a huge advantage. And since we've gotten to this degree of permanent capital, our performance has been the best in our history.
Oh, that's wonderful.
Yeah.
That's great. So tell us a little bit more, these ideas, do you have a research team, or tell us the process of finding that you're looking really for undervalued public companies? Is that your niche? Or I know you can go long or short, so maybe.
Okay, so we don't go short.
You never go short?
We don't go short stocks.
Okay.
We had a couple of times in the past, one very expensively, and after that experience, we said, look, short selling is not for us. Basically, what we do is, I sort of read the newspaper, as do other members of the team, and we, follow what's going on in the world. We look for companies that meet our kind of specific criteria. And what we're looking for are really the greatest businesses of the world at a time when we can buy them at an advantage price. And that generally happens when a company goes through a sort of challenging period. Even the best businesses make strategic mistakes, or they have, Chipotle has a food safety crisis, make your list of issues, or sometimes it's a company that is not appreciated because of certain unique attributes. And we decide it's really a great business. So our job is finding the great businesses. I work with a 6-person investment team, and all of us together look for ideas. And then when we find something interesting, typically a 2-member part of the team do a deep dive. They'll do 80% of the work. I'll usually do 20%. I'll read the public filings, I'll read the conference call transcripts. And then the team as a whole discusses the investment to decide whether it's worthy of either replacing something we currently own or just being added to the portfolio.
So I assume you go meet with the management team also after you do all the research?
We usually don't have the opportunity to meet management prior to making the investment because we're so well known for being an active investor that if we alert management that we're buying a stake, very often they'll release that as public information, and that will make it more difficult for us to buy a stake at a price that makes sense.
Got it. So give us a range when you buy into a company like Chipotle. Are you buying 3%? Are you buying 30%? What percentage do you?
It's usually I would say 1 to 15%. Most investments, I would say, are in the 5 to, it depends. I would say 1 to 10%. Chipotle, we bought about 10% of the company. In the portfolio today, we have investments where we own 1% of a company. For very large companies, we own 1.6% of Lowe's. The home improvement company. We own 24% of Howard Hughes Corporation, which is the real estate developer. We own 4% of Hilton. So those are typically a low, mid, single-digit %, occasionally as much as 10, and rarely more than that.
And do you take board seats, or in other words, your position is big enough, I'm sure, where the company has to take your suggestions, but do you actually take board seats or not?
We do sit on boards when we think adding a director from the firm can be helpful. We also recommend directors who we think have specific knowledge that could be helpful to a company.
Got it. So it sounds like you're not sector focused. It's more, finding, would you say, undervalued companies that
I hope everyone's trying to invest in undervalued companies. I don't know anyone who wants to buy overvalued ones, but we're trying to buy the highest quality businesses. We define quality as sort of durability and growth. Is this a business that we believe will continue to exist for 10, 20, 30, 40, 50 years? Obviously, and will continue to grow its cash flows over that period of time. We're looking for the super long duration, high quality company that we're happy to own for a decade or more. That's the base.
And do you sometimes pick a sector that you like and then try to find the best company, or?
No, it's usually more what some people would describe as bottom up. We look for the great businesses. All of that said, there are sectors where we've developed an expertise and we've been successful. Restaurant industry, we've been active investor, real estate related companies, but it's been a pretty broad array. Today we own retailers, some restaurant companies, a scientific equipment company, a real estate development company, financial, almost insurance like business. It's a mix.
And you'll invest in the United States or overseas, right? That doesn't have, it can be anywhere.
It could be anywhere, but for us, it's generally U.S. U.S. domiciled businesses because of proximity. And it's a big enough market where we generally can find companies. Now, most of our companies do business globally. So, but the fact that they're located here, we like SEC reporting. We think the quality of the disclosure is very good, and proximity is helpful in case we need to engage with the company.
Okay, yeah. Someone had mentioned you made a lot of money in an investment in Korea.
So Pershing invests in public companies only. And the only thing I do beyond Pershing is I invest in private real estate, venture capital, and some private equity. The private Korean company was a company called Coupang, where I was a day one investor. It was really a venture capital investment. That's the company that became $1 billion that I gave to the foundation.
Got it. Okay. Thanks for explaining that. And then Pershing Square Theater or other projects, have you done something with that?
So there is something called the Pershing Square Signature Center, which is on 42nd, I think, between 9th and 10th. It's the idea there was to provide accessible, high quality theater. The tickets are $35, and it's award-winning, great, sort of Broadway quality theater in a Frank Gehry designed structure. They've sort of been closed for COVID, unfortunately, but the foundation was a supporter of their ticket initiative.
Okay, great. And talk about, because you said you're looking and you believe everyone's looking for, of course, undervalued companies. So do you invest a lot in tech or do you avoid tech?
I would say every business today is a technology company, or if you're not, you're going to be out of business soon. I don't know. That's probably true for every synagogue. So,
Yes, William's updating all of our technology. So we can do, next time we do a Zoom with you, it'll be video conference in the synagogue. So you can come to visit. But go ahead.
that's it. It's important. The world has changed, and all that said, we don't generally invest in pure technology companies. Think a self-driving company, an immature technology. We invest in businesses that are generating profits and revenues, but if we can find a business, people think of technology companies like a Tesla, are bad for missing Tesla, but it generally we find businesses that are already generating. We like companies that today generate profits, or they're on a very, very clear path of becoming very profitable, as opposed to a business where you have to wait a decade or more. I think of that as more venture capital.
Got it. So talk a little bit about, it came down a lot this week. I'm sure cryptocurrency, is that something, you're able to do with your fund, you're looking at, not looking at?
Sure. So we haven't invested in cryptocurrency. I've been expanding my knowledge of cryptocurrency because I think it's an interesting sort of phenomenon. So there's really, I would say, two classes of cryptocurrency. There's Bitcoin, which I think of as a pure speculative asset. It's only worth what someone else will buy it from you for. And then there are some cryptocurrencies that are being used to incentivize behavior and build a business model off of that, behavior modification. And there you can actually, it's a very interesting instrument. So I learned about a company basically called Helium. It's actually a cryptocurrency, but their business model is you buy these, hotspots or these wireless access points. You put them up in your home or your place of work, and if people use them, you get paid in this currency. And the incentive, and because the currency is, the return on investment is high, right? If you can, it's motivating people to build out a global wireless network. So apparently there are 35,000 of these Helium hotspots around the globe.
Wow.
Something like 200,000 on back order. And what's motivating that behavior is that you can earn these coins, if you will, by just putting a little hotspot in your house, and you can, the payback period is something like in the several week sort of time frame. And if you want to use these hotspots, like you're a company that wants to access this global, sort of wireless, and I think the design is basically for what they call the Internet of Things, so devices that have chips in them where they need access to kind of a global wireless network. The companies pay for the access by buying and so to speak burning coins. And so I think crypto is here to stay. It's really interesting in terms of the business opportunities it helps create, although I wouldn't invest in Bitcoin or a currency that's a pure speculative asset. It's another, I think one way to think about it, it's really a business tool that you can use that opens up, where you can create, incentives for commercial behavior and build a business around it. And that to me is pretty interesting. Although to date, we've not invested in any currency.
Okay. So what about the SPAC market? It was really hot. Do you have a SPAC? I forgot. If you can.
So we have an entity called Pershing Holdings. It's been in existence for about 10 months. It's approaching, 10 months. And it has $4 billion of capital plus a commitment from us for $1 billion minimum, up to $3 billion of capital. And we're elephant hunting, so to speak. We're looking for a very large, high quality business. We disclosed publicly that we've been in discussions with one now for 6 months. And we hope to be in a position to close the transaction in a matter of weeks, or we're on to the next one. So I'll tell you in a few weeks whether it was worth the time and energy.
Okay, so when you come back, we can follow up on that one. But so the SPAC market, has it been a change in the last couple of months? Because there were a lot of them out, and I heard.
I would say we were very skeptical on SPACs generally because of their structure. And their structure was, it was a get rich quick scheme, and therefore attracted a huge amount of entrepreneurs. And there's something like 500 SPACs, and most of them are undifferentiated. And the result of that is a lot of them will not get transactions done, or they'll do deals that I think are not good for shareholders. And what we tried to do is take what is actually a good idea, the idea of a blank check company, but make it much more shareholder friendly, much more merger friendly, and then design something of unique scale, you know, 5 billion minimum capital, allowing us to buy a really high quality, good company. And so that's the thesis. And I feel very good about the thesis. I'm excited about the company that we're engaged with. And I hope that we can get a transaction done, and I can talk about it. But I wouldn't want to be, you know, one of 100 SPACs that have $300 million looking for a deal.
Sure.
I think it's very hard to differentiate yourself from others.
So you mentioned earlier, you have I think a 4% in Hilton or something, you said? So,
We own 4% of Hilton, yes. Mm-hmm.
Okay, so why don't you talk about, you know, COVID created, I assume, opportunities in hospitality, certain industries. You mentioned earlier you don't look at industries, you look at specific companies, but are there, you know, are you seeing more opportunities in specific industries, either based on COVID or political reasons, et cetera?
I would say, you know, COVID created a unique opportunity to buy more of our existing holdings at a very attractive price. And I was very negative or concerned about the implications of COVID, you know, obviously both from a health perspective, but also from an economic perspective. And so one part of our strategy, in addition to owning great businesses, is hedging risks like that. And so we were fortunate in making a small investment that became very valuable, that we were able to use those proceeds to buy more of a bunch of companies. And our thesis was that if the government managed this correctly, you know, a year from kind of the beginnings of COVID, the world would be on its path to recovery. And by the second half of this calendar year, we would go a long way. And I think we are on that trajectory. I think we're going to have, and because of, I mean, perhaps even perhaps too aggressive government support for the economy, we're going to have an enormous economic boom beginning, you know, it's already really happening. And I think almost every CEO I talk to is having issues hiring people and buying, you know, the supplies they need to make their products because of the huge amount of demand that's been created. It's going to be, there's a reason why the 1920s came after the last pandemic, you know, similar kind of phenomenon, although here there's a lot more government support, fiscal support, Federal Reserve support. So it's going to be an interesting period the next couple of years, I think. And
as COVID, we spoke before we were recording, but because of COVID, are you changing, you know, employees coming to the office, or do you think there's a long-term effect of COVID, or do you think it's more of a short-term for you?
Yeah, so it's something we've had a fair amount of discussion with at the office. I think there are probably some employees who would love to work from home. I think working from home is really bad for a business. I think, you know, if you're not feeling well, of course, if you've got an important health-related issue you need to deal with, or you want to, you know, be present, of course, for a meeting with your kid's teacher, you know, those kinds of things, you know, I think it's easier to manage. You know, Zoom, I think, is helpful. But I think, you know, our organization was successful over the last year because we built a great culture in person. And I think that culture deteriorates if half the firm is not in the office every day. And so I'm kind of with Jamie Dimon that I think you need to bring everyone back. And there may be companies that work from home works very effectively. And you can see a migration of people from, you know, businesses that are happy to have work, you know, that don't want work from home employees, to companies that do. But I think in our business, it's really, really helpful to get the team together. And in fact, the investment team, you know, our investment team has been meeting virtually for a year, but beginning maybe 5 or 6 weeks ago, we started meeting in person at least once a week, and now more. And it's the quality of the conversation is just much better, and it's more fun. So.
Great. So talk a little bit, we're an Orthodox community, of course, but talk a little bit about either or both Israeli investing. Do you invest in Israel? Your connection to Israel? Are you involved through your foundation?
Sure. So I'm married to an Israeli. That's a more recent phenomenon, but
Okay.
we've been together for about 4 years, or almost 4 years. I've been philanthropically supportive of, various. I was actually chairman of the Jerusalem Foundation, a long time ago, maybe 20 years ago. That's probably when I spent the most time kind of going back and forth. I'm not an investor in. I'm an investor in one Israeli venture capital fund, personally, but our businesses are, as I mentioned, are generally located here in terms of where they're based. In terms of my connection to Judaism, I'm a more recent member of Central Synagogue, big fan of Rabbi Bergdahl and that congregation, we have Shabbat dinner every Friday night, which is a great and important tradition. But I'm not a particularly religious person, I guess I would say. And that's how I describe but I've got tremendous connection to my my people, so to speak.
And do you get active politically? I mean, this was a very political week in Israel, but do you kind of shy away, or do you support Israel causes, or where are you in that regard?
So I'm not involved in Israeli politics at all. The foundation has done stuff in, I would say, the area of economic empowerment. We've supported peaceful coexistence type programs, things like everything from summer camps to initiatives to train people to start businesses in East Jerusalem, and then some more larger scale type projects like that. But it's not been a major part of our philanthropic initiatives.
Okay, and you mentioned your wife is Israeli, so you haven't really changed in the last 4 years. You've been relatively consistent. It's not like you married an Israeli and then all of a sudden things shifted.
Yes, I've been consistent. Although I would say our Shabbat dinners are more consistent than they were previously.
Okay, so I assume. Sorry,
we've made it something that a tradition we keep.
Right. I'm assuming growing up in a Jewish home, you also had Friday night dinners also, right?
We did, but not as ritualistically as perhaps we should.
Okay. Okay, that's great to hear, about going forward. To talk a little bit, you're involved with the Fed. Can you explain that? How long you've been involved and what that means?
The Reserve Bank of New York has what they call an investment advisory committee, and they have the CEO of Vanguard, chief investment officer of JP Morgan, Guggenheim, Ray Dalio. It's a very interesting group of people, about 10 of us, maybe 12. And, I think it's an opportunity for the Federal Reserve Bank to hear from practitioners who are investing in markets. And I look forward to it. It's a quarterly meeting for, it used to be in person, hopefully we're going to be in person soon, for about 4 hours. And I find it interesting to compare notes with other people in our industry and to hear from the Federal Reserve Bank staff.
That's great you do that. Talk about Rockefeller University. So what's your involvement with Rockefeller?
Actually, I recently stepped down from the Rockefeller University board, but it's a great scientific institution. Most of the boards I've joined have been ones with that are not large, very large boards. This Rockefeller University is like a 40-person board.
Okay.
And I like the kind of smaller scale ones where I can move the needle more. But it's a great institution. It does very important work, and actually it's done very important work in the COVID period as well.
And you're actively, not only did you graduate at Harvard, undergrad and grad, but you're actively involved with Harvard. Is that correct?
We've started some initiatives there. There are a bunch of professor chairs. We started something called Foundations of Human Behavior, which is an effort by Harvard to create really make Harvard the most important university in terms of behavioral economics, and integrating economics, with psychology, biology, and various fields to help determine how people behave, right? The pure study of, pure economics, people behave differently from the way one would expect by a pure economic sort of model. And I think behavioral economics goes a long way to better describing human behavior. And this effort is kind of an even broader version of that. So that's probably the most significant thing we did at Harvard.
Okay, great. And is Harvard, you're on a board officially, or just more financially?
I'm on the what's called the Dean's Advisory Board of the business school, and it's a group of about 100 alums who help give the dean advice on, I guess, the school, the management of the school.
Oh, that's exciting.
Yeah.
Okay, great.
It's fun.
So we're coming close to our hour. I just want to give William Friedland, your friend, and Ray Babbage a chance if they want to come back on, and if they have any other topics we didn't cover. If not, we'll cover some others. Rabbi or William, did you guys have any?
Sure. I have a quick question. First of all, of course, Bill, thank you for your time, and this has been really interesting to listen to. But I'm curious on the philanthropic side, what do you think has been the most impactful for you personally? What are you most proud of from the work of the foundation?
So when we started, we focused on backing what I would describe as social entrepreneurs, and it was the reason why we focused on social entrepreneurs is I thought, look, we've got limited capital. How can we move the needle the most with, how can we have the most leverage effect? And we backed talented individuals who were pursuing initiatives that we thought made sense. And a number of those talented individuals have built important organizations that I think have moved the needle. A couple of good examples. There's a guy named Andrew Yoon who started something called the 1 Acre Fund. And when I met him, he was working with a couple thousand farmers in Kenya and working to, in fact, take them out of poverty by teaching them, modern day farming techniques, how to apportion fertilizer more efficiently, getting them access to better seed technology, irrigation, etc. I thought it was really a brilliant idea. And I think he's now taken something approaching 1 million farmers out of poverty. And I said when I met him, and this was at the very early days of the foundation, I think you're gonna get the Nobel Prize, Peace Prize. And I think he will. So take a look at the 1 Acre Fund. But we were his first large ticket, for him at the time. I forgot what our initial donation was probably $500,000, but that was a very big number. So we were giving $500,000, $1 million, $2 million, $3 million investments to entrepreneurs that could barely scrape capital together, but who were very talented, a bit like venture capital in the kind of for-profit world. We did the same for a woman named Amy Bach, and Amy Bach started an organization called Measures for Justice. And basically what they do is, all of the criminal justice data that emerges from, the courthouses is public record information, and the individual courts have the obligation to make that information public, but many of them don't make it easy. And what she did is basically got access to that information, worked with the Justice Department, et cetera, and publicized it in a format that is easily accessible by the media, and then looked at the data. And in the same state, you could see very, very different outcomes depending upon which crime you were accused of committing. In one county, 90% of the people who were accused of, child abuse, were, convicted, and another might be 15%. You see widely disparate outcomes, and disparate outcomes when you look at the ethnicities of the parties involved, and again on a county by county kind of basis. And we thought that kind of data was really interesting and powerful, and so we backed her, and that's become actually an important organization in helping address, I think, criminal justice reform and other issues. So I think some of our greatest successes have been those kind of early entrepreneurs. The other thing we've done that I'm excited about is we started the Cancer Research Prize a number of years ago, and each year we give about 6 or 7. We have an advisory board of, I would say, the most important scientists and heads of cancer-related institutions in New York City, and we've awarded probably 50 odd prizes at this point, and the winners have gone on to do really important work. And so we like our favorite examples are things where a relatively small amount of resources turned into big impacts. I would say those are some good examples.
And you like to be early, I assume, right? Where you can have a big impact like on your investments.
Sure. Well, again, we've done a mix of things. Harvard, we're not early, probably 400 years late, but we do like things where we can, on the margin, move the needle.
And you've been involved with the Center for Jewish History. Can you talk about that a little bit? Is that part of YIVO? That's where I think I first heard you speak.
Sure. So Center for Jewish History basically took YIVO, American Jewish Historical Society, Leo Baeck Society, a number of kind of Jewish historical institutions that were scattered across the city, and consolidated them physically in a beautiful building with proper archival preservation resources, a theater, presentation spaces, museum, etc. And I think it was a very, very good idea. And I get involved when things are a mess, and I was brought in by Joe Steinberg, who an important mentor for me. And at the time, be careful about borrowing money. Or maybe I'm telling you this at the time you're doing your renovation, but they had about $32 million of debt that they had not remaining. And then the financial crisis hit, and it was kind of at a bad place. So I joined and ultimately helped them and led a campaign to pay off the debt and kind of stabilize the institution. I didn't get done everything I wanted to get done because really of an issue of governance. I'm a governance investor as a shareholder activist. And in order to combine these different Jewish organizations, the folks from Wachtell, who on a pro bono basis, I think helped create the entity, created an entity where it's very difficult to get things done. And ultimately, we didn't get the level of synergies that I think we needed. And but I think it's a very important institution, does important work. They have great genealogical resources. And so it is something that I think it's important we preserve our history. But combining Jewish organizations that are very passionate from different ethnic East European Jews, German Jews, Syrian Jews, all under one roof. Sometimes we can't get things aligned as well as you would like. So an interesting experience, to say the least, I would say. But good organization.
So are you still active there, or that was just that project and you kind of moved on?
Yeah, I was kind of full on active there for a period, but I'm not really directly involved. I think we've been supportive on occasion.
Okay. One last thing. So inflation, are you concerned about inflation, and how can we offset that?
Yes, I think it's the single biggest, what I would call black swan risk to markets and the economy. We've had this period of time where we've gotten complacent about inflation because there has been none, and we've had a lot of deflationary events. Technology has been inherently deflationary over this sort of period as well. And but I think we may be at the fulcrum point for that to change. And the catalyst, at least the initial kind of match that lights the fire, is we have several trillion of Trump stimulus. You have the Biden stimulus. You have a big infrastructure plan coming. And then you have the stimulus of a very successful vaccine program where people are emerging into this summer having not spent a lot of money in the last 15 months. So you have these huge demand drivers fueled by a lot of fiscal support to the economy. The fact that a meaningful percentage of our country did very well. The people who did not lose their jobs in the last year actually in many cases did quite well during the period. Technology companies, Wall Street investors. It has been a period of exacerbating, sort of income inequality, and people who were going through a more difficult time, the government stepped in and supported them during the period. And I think you've had this very, very accommodative Federal Reserve policy of kind of a zero interest rate policy that is expected to continue, and they've stated it will continue. It used to be they waited for the whites of their eyes, so to speak, in terms of inflation. They see it coming and they would take a preemptive step. Now they said, look, we want the troops to be kind of climbing over us, off in the distance before we think about raising rates. And I think the impact of that is we may see, I think we're already experiencing large spikes in inflation. I mean, look at lumber prices, copper prices, single family home prices, cryptocurrency, the stock market, and then just, food inflation, restaurant prices. I just think we're going to enter this what is not likely to be a temporary inflationary period. I don't think wages are going to go up as they have and not start to go back down again. I think that you'll see a floor for wages approaching. So I think it's good for the country that wages are going up, because a lot of people have not benefited by the success of capitalism over this period. But they'll need more wages because the basic goods and services are going to go up meaningfully in price. I do think it's important that the Federal Reserve act more quickly instead of waiting for inflation. So I do think it's one of the risks that investors should be looking out for.
Okay. So Bill, I want to thank you. A lot of our members, are getting vaccinated, but a lot of them are not comfortable coming back to synagogue. I don't know. So these Zooms are super important to engage the community. And I really appreciate you giving us your valuable time today. And hopefully we'll have a follow-up Zoom with you and William Friedland, and hope maybe we'll even get an in-person meeting before then. But either way, I just wanted to really thank you for your time today, and we're very grateful. So thank you so much.
I appreciate the time and excellent questions. I didn't know you were a rabbi. I would have thought you were in the investment management industry. So
I'm actually not the rabbi. I'm the president of the synagogue. So.
I didn't really president. Okay, I feel better about that. Okay.
Okay, but when we meet in person, we'll catch up on personal.
I saw multiple rabbis on the list, so I figured you might be one as well.
Okay, no, not a rabbi, not planning to be, but thank you.
Okay.
Okay, have a great day, Bill. Thank you so much.
Thank you.
Thank you.